In this video presentation, we will talk about what is CFD. CFD is the contract for difference. It is similar to futures. Their purpose is to exchange the difference in present value of trading derivative. In normal futures contract, the difference in settlements are normally settled by securities or physical goods, while in CFD it is settled through cash payments. The risk of trading CFD is counterparty risk, where the counterparty, such as CFD provider, are unable to meet their obligations in trade. The second risk is market risk. The uncertainty in trading markets, such as changes in government policy and unexpected information, will cause the price to be unstable and cause losses to the traders of CFD. So let's move on to technical analysis. The first indicator we will be talking about is moving average convergence divergence, MACD. This indicator is useful in forecasting the futures price trend as it combines both momentum and trend into single indicator. The limitation of this indicator is that it unable to measure the overbought or oversold level and did not take it into account when computing the moving average. To overcome these limitations, I have chosen another indicator, relative strength index. This indicator is used to figure whether a share or in other financial derivatives is overbought or oversold. The overbought level is 80 and the oversold level is 20. Let's move on to the transactions that I've done in platform plus 500. The first is currency. I have bought the currency pair USD/ZAR, and this is a summary of the trade. From the chart, we can see that MACD chart that the buy signal is when the MACD line crosses the signal line. This is the buy signal, and the sell signal as at the 21st of May around 4:45 p.m. This blue line indicates where I bought this share, and this red line indicates where I sell this share. The RSI level is considered normal when I buy this currency pair. Let's move on to index. This is the summary of the trade that I've bought. I've bought Japan 225 index, also known as Nikkei 225. The reason I bought this share is because the MACD chart and RSI chart is considered good, and I also found out that there is new indicate the Asian market will advance due to recent economical policy announced by the United States. The United States has decided to put the trade war between them and China on hold. The impact from this announcement is huge, as US and China is among the largest market in the world. For commodity, I've bought copper, and this is the trade summary. I've bought copper before the MACD line crosses the signal line. This is because I want to buy as low as possible, and the RSI is considered normal when I bought copper. There are many sell signals before I sell this share, and I did not follow the sell signal. The reason is because that I haven't made profit from this trade. When I made profit, I've sell this share on the sell signal on the 22nd of May, 8:15 p.m. Followed by the shares. I bought Macy's, and this is the first trade that I've made losses. And this is a summary of the trade. When I bought Macy's, the MACD line is above signal line, and RSI is considered normal. On the 22nd, the price went up, and I did not sell this share on the sell signal on 22nd of May. This decision was a bad decision, as the price has fallen on 22nd of May, 8 p.m. The huge fall causes a huge losses into my account, and I have cut my losses on 22nd, 23rd of May as the MACD line crosses more down. After I've done some research, I realized that the price earning ratio of Macy is lower than the industry average. This would mean that the company will have poor current and future performance. Furthermore, the drastic fall in price could be due to the bearish market of oil and gas sectors. This is the overview of the 4 trades I've done. I've made a total profit of 148,000 in my account, and out of the 4 trades, I've only made losses on Macy's trading. As a conclusion, we must do more research on the underlying asset before buying. We should use both technical analysis and fundamental analysis to analyze whether the underlying asset, the financial derivatives, is worth buying, and we should not follow the trend blindly without doing any research.